What's up guys, Vladimir here from Home Trader Club. Welcome to the weekly Forex forecast. Before we begin, big thanks to 8K Broker for supporting our community to continue and enjoy all the special offers, amazing offers we have with 8K Broker, including Home Trader Club up to 1 full year, private mentoring session, all the trading systems and the trading strategies. Please refer to the link below this video in the description. Euro dollar, our first pair for today. Last week we discussed on a scenario that we can expect the euro dollar to form some fake peaks before the reversal takes place. As you can see, the price is still structuring itself pretty much in the same direction. While we got some attempt for one fake out already, second one is still doable, and I believe that the euro dollar is now around the area where it should peak. Here is why. Let's go to the weekly chart. On a weekly chart we are still around this key zone. Broken support, acts as resistance, last high of the uptrend, acts as supply. This is the key area, and I believe that the coming weeks might be not as straight to the downside, but I believe around this area we should see the euro dollar peaking before a major correction takes place. If we take a look on the Bollinger Band indicator, let's use this is our custom made indicator. We can see that from this breakout we are around the key duplication level. This is happening on the weekly chart. On a daily chart we can plot Fibonacci extension on this trend and take a look what you will see here. We have Fibonacci extension of 61.8 around the levels where we are right now. This is the second time the euro dollar is riding on the upper Bollinger Band without a significant retrace. Last time it happened to the upside was here, and we all remember what happened. To the downside was here, and we all remember what happened. So I believe that the Fibonacci level, the Bollinger Band duplication, the Bollinger Band overriding on a 20 more than 20 candles on the upper band, bearish divergence on the MACD and the RSI should bring the euro dollar to peak on the coming weeks. It might not be instant, and then start its correction to the downside. So the current levels of 118 up to 120 are critical. I believe the correction down should bring the euro to the 116, 114, maybe 114, 113, and maybe even as low as 111. In terms of potential setups on the 4-hour chart, there are two scenarios to work with that. Scenario one is if we get another fake out, look for the sell setup after that. Look for completion of a bearish divergence here, right? False breakout, maybe one, maybe two, and then the reversal sign. Second option is we build up some sort of a trending structure, so like zigzag, 2 waves down, some range, or 2 waves up, and then making its breakout as well. Since the daily chart already offers the divergence and all the other conditions, this is definitely a possible scenario. If we go to check the numbers inside Home Trader Club members area, the market trend snapshot, we can see the euro dollar numbers shrink from a very major numbers over 3% on the months, over 1% on the 7 days, and the last day starts to shrink, means the momentum is losing, and that's what makes me think the euro dollar is close to the peak before its reversals. What do you think about the euro dollar? I'm very interested to know. Let me know in the comments. Next one would be the pound dollar. So a follow-up on our last week discussion. We were talking pretty much similar to the euro, that we should see false breakout before the reversal take place. Pound dollar makes this false breakout right at that area, one false breakout at that case, and After that makes a strong move to the downside. Similar to the euro dollar, the pound dollar is around its key zone. We have major supply zone, of course broken support acts resistance, and of course this supply area. And in terms of the Bollinger Band, if we take a look on the breakout, we are around the key zone, which means that duplication is taking place and another pressure starts to build up. This is on the weekly chart. If we go to the daily chart, we have another fake out here. Peak, false breakout of this area around the 137.50. All that happens to be under a bearish divergence on the moving average of the MACD, putting the pressure to the downside. Now, very important to say here, I don't think the corrections are for the long run. I think that for the long run, the bullish momentum is still here and here to stay. I believe the bullish trend is not over. So any retraces here for the long run should be used as a buy opportunity. However, on a short run, there are a couple of scenarios where we can see the pound dollar working on the coming weeks, and we might be facing this corrective movement. So we got the first move down. After these retraces, we might actually experience the second move down, maybe even something bigger like a zigzag, and then continuation to clean the daily lows. So as long as the peak of the 137.85 around that area holds, I would be looking for the short-term sell. And even if a new peak is created, theoretically could happen, I would still be expecting a deeper correction to take place eventually. The way I see that, we should get some corrective movement, ideally to go back to 134 area, maybe even as low as 132 before the next buys would take control. So for me, it is after sell here, even if we get it, as long as the last peak holds, of course, but even if we get a new peak, I'm still looking for the sells. In terms of numbers, this one not as bullish as the euro, less than 1% on the months, 0.18, 7-day flat around 24 hours, which means the buyers are losing their grip, they are losing their air on these peaks, and that's what makes me think that correction is very likely around this zone. So for me, I'm looking for the sells on the pound. Next one, dollar yen, and on the last week we were talking about the break of this trend line should be leading to sell the rallies. So the break happens, the retrace happens. The question is, are we already good for the sell? So for my view for the long run does not change. I still expect dollar yen to complete the second wave to the downside and look for the sell. The question is about the timing, and on the lower time frame, right now what we are facing is an instant retrace. However, the key levels still hold. We have this peak holding and this zone holding, and as long as they hold, I believe the sell is there. We might see here some sort of movement like that for a while. We might see that even trying some deeper corrective movement. We might see the dollar yen even a bit rare, but could happen, even trying to rally again to the higher level of this range. But I believe that every rally for this one specifically should be considered a sell opportunity later on. So for me, the dollar yen, as long as these levels mentioned hold, I am after the sell. One thing to pay attention to here in terms of the numbers is that we enter the negative zone now on the last 7-day and 24 hours. All that after shrinking momentum from the monthly. So the bearish momentum from my point of view, once again, still on, and I'm looking to sell the rallies. And the final one is gold, which was not doing much in that case. And that is a bit suspicious, because when it fails to gain the bearish momentum, it means that there is a chance to see another attempt for the rally until the divergence completes, and then a big drop to the downside. So there are two scenarios I see on the gold. Right now, as long as these zones, I would say, hold, I believe gold can deliver the beautiful sell. And the reason for that is because we did have sequence of lower highs, lower lows. We got some correction, and the supply levels, which are the last highs here, around or in between 33.40 and 33.95, they hold. And as long as that's the case, the gold could actually push lower. However, again, it does not easily gain this bearish momentum right now, which means we never had these fake highs on the daily chart yet. But and that means that there is a chance the gold will try to see another peak. And that connects to what we see on the weekly chart, because if we do have this peak taking place, we would anticipate to see the bearish divergence complete both the weekly and the daily chart, and then some much bigger retraces take place. For me, gold is under bearish pressure. I am looking for the sell setups here. I believe with all the technical things we currently face, the opportunity to the downside, or the probability to the downside on the coming weeks, is bigger than to the upside. And it does not mean that there is no chance we see another fake high here. This is an option, and this is a possible option in that case. However, as long as the levels hold, I am after sells. If we get another fake out on the peak, okay, we will be looking for new setups on the new false breakouts. The way it is, and on the overbought conditions it is, I personally prioritize to look for sell setups, even if it means I will miss some of the rallies. It's just personal preferences. I am after the sells. How do you see the gold? What would you expect with everything happened there from the gold prices to do? Let me know in the comments. That's it for this video. If you enjoyed it, please don't forget, hit the like button. Subscribe to our channel if you are new to this channel, and I want to invite you to our trading family, the Home Trader Club. Enjoy our full courses, real-time education, real-time trading opportunities, access to the community, and so much more. Join our family with the link below this video in the description. Thanks for watching. Best to you and yours. I'll see you soon with more good trading. Bye for now.